So let's have a look at Ethereum relative to Bitcoin since the merge. Over here, the vertical line, this is exactly when the merge happened. And so far, all what we can see is red, right? This drop since the merge is roughly 6%, and this is relative valuation, right? So this is Ethereum measured in Bitcoin. Now it's pretty much happening as anticipated, as in people bought Ethereum before the merge in order to then be part of one of the ETH wallet holders in case there is a fork, a proof of work fork that then might provide you with free tokens that you can potentially afterwards sell off. So people bought in anticipation of that. Then once that potential snapshot had been made, that's the time when the sell-off happens. Now, is this just a short-term effect, or where will Ethereum now move over the next weeks and months? When in doubt, zoom out. So let's do exactly that. Let's look at Ethereum over the long term. Again, this is the relative valuation, right? We're not looking at the US dollar valuation. We can see this chart here starts in August 2017, that Ethereum is trading in a range against Bitcoin, right? When there's a crypto winter, Ethereum tends to lose more. When crypto tends to trend up, Ethereum tends to also gain against Bitcoin. So Ethereum, in a way, is a levered play on Bitcoin. The ups as well as the downs are simply magnified. Now, what's interesting about this chart here is that currently with this merge, we are still comparatively elevated in price, right? How much could we potentially, let's say something like the past would happen again? Who knows, right? But how much could we potentially lose against Bitcoin? What's the worst case? It's roughly an underperformance of 78%. That's the kind of volatility that we're dealing with here. This is going to happen, of course. Nobody has a crystal ball. What I do want to show, though, is the potential upcoming supply that might be hitting the market. So prior to the merge, you were able to stake your Ethereum on a platform such as Lido Finance, right? And a lot of people have actually done so. We see over time, more and more ETH had been locked up in the contract. It's in total 13.7 million. So that's the number of ETH tokens. Currently, there is 122 million in circulating supply, meaning 11.4% of all of ETH's supply is currently locked up. Now this will unlock. It won't unlock in a single day. It will unlock gradually, probably starting in a few months and taking roughly 1 year. But that's something to consider, right? The idea that Ethereum is now the ultrasound money where inflation is negative. It might be the case in the far future. And when we just look at the next 1 to 2 years, the burning of ETH tokens due to transactions is likely going to be lower than the unlock from these staking contracts. In other words, new ETH is hitting the market, and that could potentially also push on Ethereum's price, right? It could depress the price. Now there's a similar Damocles sword hanging over Bitcoin, which is the Mt. Gox release, right? The Bitcoin that's due to be distributed for Mt. Gox is roughly the same size as has been sold off during the Luna collapse. So that's also something that shouldn't be taken lightly. But this video is about Ethereum, and simply be aware that currently, historically, Ethereum is quite expensive relative to Bitcoin. What's also important is that Ethereum does have quite a bit of competition, right? This is DeFi Llama, and it shows the different smart contract platforms in their relative standing to one another, as in how much total value locked is in each of those layer 1 competitors. So Ethereum, of course, is still leading quite massively with 57% of all of smart contracts total value locked being on Ethereum. But we've also got Tron with 10%. We've got the Binance Smart Chain with 10%. And then comes Avalanche and Matic and of course a few others. But what's important here is that Ethereum is not operating in a vacuum, right? This chart here, it starts in August of 2020. And the long-term dynamic is that Ethereum tends to lose market share versus the rest. This spike here that we see over here, this was the implosion of Terra Luna. But taking long enough of a time frame, Ethereum will have a hard time keeping that market share. The only way I think how this momentum could turn around is really if the gas fees come down. But the current merge didn't really change the gas fees, right? It only changed the validation mechanism. So until we've got cheap gas fees on other chains that might be a bit more centralized, but that are way more efficient with transactions, Ethereum might continue to have a problem outperforming. This is of course simply just one of many opinions. Simply just take this into your own considerations, make your own judgment over here. I personally, I am not overweighted in ETH. I think right now, in this moment in time, Bitcoin is probably a better bet, or maybe even a layer 1 competitor that doesn't have too much token inflation. So AVAX does have quite a bit of token inflation, more than 20%, but maybe Polygon Matic, maybe BNB, those could be alternatives that might over the years be able to outperform ETH. That's at least where I currently put my money for the longer term bets. If you're wondering what kind of smaller altcoins I trade, feel free to check out thebitcoinstrader.com. That's the link to the premium membership. And of course, if you haven't yet, feel free to subscribe as well. There's also a free Telegram group. Simply search for Bitcoin Strategy channel within the Telegram app. There's more information about the premium membership here in this video. Hope to see you there, and thanks for watching this one. Bye bye.